Hey everyone, welcome back to Bitcoin Basics. In today's video, we cover a topic that might be of great interest to anyone who has dreamt of owning a whole Bitcoin, but has thought that it is impossible owing to the price rise in the last few years. Indeed, there was a time in Bitcoin's history when you could buy a whole Bitcoin for a few cents or mine, it using a CPU computer, but that time is long gone, never to return. To acquire or save a Bitcoin today is almost equivalent to saving $100,000, an amount that Charlie Munger, Warren Buffett's business partner, observed in the 1990s as the most critical milestone in wealth accumulation. According to Munger, reaching savings of $100,000 is hard, but after that, it generally becomes easier to cross even higher heights of wealth accumulation. Indeed, owning a Bitcoin today automatically puts you in a small but respectable class of crypto investors. So, what specific challenges could prevent you from acquiring and owning a whole Bitcoin? And what steps could you take to make your dream a reality? Let me know what you think has scared you from pursuing that goal down in the comments. Meanwhile, stay tuned until the end of the video, where we'll explore some strategies you can employ to start multiplying your Bitcoin holding and even accelerate the process. Along the way, we will break down why Bitcoin is different from other investment assets, especially when it comes to accumulating it. Before we jump in, if you're new around here or just beginning your Bitcoin journey, be sure to hit the like button and subscribe to never miss out on the latest videos from Bitcoin Basics. This episode is brought to you by Uptrade, the crypto broker who can help you unlock financial freedom. With decades of experience in digital asset brokering and wealth management, Uptrade can give you the peace of mind to embrace the volatility of crypto markets. Partner with Uptrade and invest with confidence. Now let's get started and find out how you could acquire and own a full Bitcoin. While we can tell it is a small club, it is difficult to tell how many people exactly around the world own more than a Bitcoin. While Bitcoin transactions are recorded on a public ledger, and the data is accessible for anyone around the world to read, it is nearly impossible to know the actual identities of the people behind the transactions and the addresses that hold the Bitcoin. It is also often the case that one person has multiple addresses, and therefore, there is no way to get the total of their investments. That said, we can get a rough estimate of the possible number of investors who own more than a Bitcoin, more as a percentage of all Bitcoin holders. According to data from bitinfocharts.com, an online tool that provides statistical insights on the use of Bitcoin and other cryptocurrencies, about 1 million wallet addresses hold a Bitcoin or more, which is about 2% of all wallet addresses. Think about that for a moment. Only a maximum of 1 million out of the nearly 8 billion people on Earth own at least one full Bitcoin. That works out to be only about 1 in every 8,000 people. So indeed, if you end up saving a whole Bitcoin, you join a special class of investors. However, while it is an uphill task, it is possible. It is important to point out that it is not required that you have to buy an entire Bitcoin at once. If that is what has stopped you, then here is the good news. A Bitcoin is divisible by up to 8 decimal points. This means a Bitcoin can be subdivided into 100 million units, or satoshis. Indeed, it is more practical to build up your Bitcoin savings by buying a few satoshis, or sats, at a time. It is always easier to achieve a goal when you break it down into smaller, easier to accomplish tasks or milestones. For example, you can give yourself a target of buying 1 million sats every month, which is 0.01 Bitcoin. However, before you start accumulating your sats, it is important to think about security. Remember, you become your own bank when you use Bitcoin. That comes with a lot of freedom and control over your assets, but it also comes with a lot of responsibility. If you lose your private keys, the digital signature you use to prove ownership of Bitcoins and approve their movement from one address to another, there is no customer support to reach out to help you recover them. And if you never recover the private keys yourself, your stash of sats is lost for good. It is therefore important that you select a reliable wallet application. Preferably, you should use a hardware wallet. It offers better security and is more convenient to use. Even with that, you need to securely and safely store the recovery phrase, which is a string of words that have to be used in a particular order to recover your private keys. Indeed, setting up a wallet and ensuring you can always access the primary keys is a critical preliminary step to saving up a significant amount of wealth in Bitcoin. Lifestyle inflation. With the preliminaries taken care of, it is time to find the resources to acquire your satoshis. To save a Bitcoin, you need a strategy similar in some ways, not in all, to the one you need to use to save your first $100,000, as observed by Charlie Munger. That includes reorganizing your entrepreneurial enterprises and lifestyle so that you can have extra disposable income to purchase some sats every month. One obvious path to having more resources to enable you to increase your stash of sats is to increase your income. That means taking up an extra job, finding a job that pays a little more, or expanding your entrepreneurial efforts. But this will only work if you can overcome lifestyle inflation. If you fix your income and do not watch or avoid lifestyle inflation, you will just find yourself where you started, except that you receive a bigger check and spend more money. Lifestyle inflation is the temptation to upgrade one's lifestyle whenever their income grows. For example, if you've started making an extra $4,000 every month, you may feel the need to move to a bigger house, acquire a newer car, or go out more to have fun with friends. For your increased income to work for you, and in particular, help you accumulate Bitcoin, overcoming the temptations to upgrade to match your new income is important. In other words, while increasing the money coming in, decrease or at least retain the amount going out. It is the difference that will go into increasing your Bitcoin holdings. Income. Of course, your initial savings will come from your wages and salaries unless you are an entrepreneur or investor with a sizable passive income stream already. For now, let's assume your income depends on how many hours you work. Income based on selling time can be challenging to replicate or increase because you are one person with a limited amount of time you can work in a day. Nevertheless, this is the initial source of income for many people. The savings from this kind of income stream might not seem like much, but they can often be the foundation for building a major investment like a Bitcoin or several. The goal is to increase your savings to the levels that bring in meaningful returns that can also be plowed back to create a cycle of investment that expands your holding with increased volume with each cycle. Investment growth. As you develop your strategy for saving up to one full Bitcoin, you should remember that time is of the essence. In fact, the urgency of time is a major challenge to saving a Bitcoin, and that is because, over time, the price keeps going up. As mentioned earlier, in 2010, you could buy a whole Bitcoin for less than $1. It then became a couple of dollars, a few hundred, and so on. In a few years, one Bitcoin could be worth a couple of $100,000. In essence, as the price of Bitcoin increases, saving up to one Bitcoin becomes harder. Your dollar cost averaging, DCA, will get you fewer and fewer Satoshis each week or month. For example, if you had set aside $2,000 to buy 2 million Satoshis every 2 weeks, at some point, instead of getting 2 million sats, you might only get 1 million sats. All hope is not lost, though. If you leverage the Bitcoin price cycles, you could keep getting almost the same amount of sats with your DCA even as the price keeps going up. While the general trend of the Bitcoin price is an upward trajectory, it undergoes significant swings. There are bullish or summer phases when the price is moon and bearish, winter phases when the prices drop significantly. You could plan yourself so that instead of buying consistently every 2 weeks, you buy more in months when there is a significant price drop and save your dollars in months when the price is a little higher. For example, it was probably not the right time to buy, as Bitcoin reached an all-time high of $67,000 in late 2021. It was better to save the dollars and buy more when the price dropped below $20,000 in late 2022. However, pursuing this strategy requires you to learn how to study market movements and, more importantly, how to predict likely future prices. The foundation of that is studying the history of the Bitcoin market's fundamentals and analyzing its technical aspects. It is also important to understand how the macro and microeconomics in the wider global financial markets impact the price of Bitcoin. For example, high interest rates and high yield returns on government securities in major economies like the US generally stagnate the price of Bitcoin. The point is that you should find opportunities to buy your sats at significantly lower prices, even when the general price trend in the long term is upward movement. Fiat inflation. When saving fiat currencies like the US dollar, it is important to factor in the impact of inflation. Over a long period, fiat currencies lose their purchasing power. For example, if you put $100,000 in a safety deposit box a decade ago, while it might remain the same amount, it will acquire you fewer goods and services today than it would have 10 years ago. This is why it has always been important that when you save in fiat currency, the money should earn interest, and that interest should cumulatively exceed inflation. Fortunately, when you save in Bitcoin, you don't have to worry about inflation eating up your value. If anything, at least as the cryptocurrency has proven over the last decade, its value grows over time. That is because, unlike fiat currencies, Bitcoin is a deflationary asset. That means its amount is capped at 21 million. As its demand grows, the supply largely remains the same, at least in the long term. In fact, the supply of Bitcoins could shrink in the long term, as some coins are lost due to people losing private keys. According to a report by Chainalysis, between 3.5 and 4.5 million bitcoins have been lost for good because the private keys to the wallets holding them cannot be recovered. Indeed, the deflationary nature of Bitcoin is the reason you need to act fast to reach your goal of saving up to 1 Bitcoin. As already explained, the longer you take to do it, the more it is likely to cost you. Of course, this can be a source of much pressure, especially compared to trying to save $100,000. It won't be long before holding at least 1 Bitcoin will put you into a special class. It will take an effort to make that initial savings to 1 Bitcoin. The earlier you begin, the easier it will be for you. Given how fast Bitcoin is increasing in value, the longer you take to begin that journey, the harder it will be. So do you think that saving up to a full Bitcoin is something that is still achievable for most people today? Please leave your thoughts and opinions in the comments section below, and I will do my best to respond to all of them. And that's all for today's video. Don't forget to subscribe to Bitcoin Basics and hit the bell to be notified when future videos are released. Please leave a like to support the video. Find the links to my social media platforms in the description to follow Bitcoin Basics on X or Instagram. Until next time, I'll see you on the charts.